I have question. When they say closing cost, is that talking about how much we pay for house?
No, how much we pay for house is how much it's the price of house plus not the down. I don't know what costs are. Hey, welcome to episode 5 of First Time Home Buying and Selling. I am Josh Madison, residential real estate broker in the state of Arizona, and today we will be breaking down loan closing costs and your title company closing costs. Plus, we'll give some basic figures of how much you can expect those to be. So, let's get into it. Well, congratulations. You're all pre-approved for your $100,000 loan. You have the down payment money amount set aside and you're ready to go. Everything is perfect. Then you discover you need a few thousand more dollars for closing costs. What? Closing costs? Yeah. Closing costs can vary depending on your purchase price, but for a ballpark figure, they can typically land anywhere between 3 and 5% of the loan amount. So with our $100,000 purchase price example, that's $3,000 to $5,000 cash that you'll need saved on top of your down payment. Man, that's a lot of money. Well, this is why they call a home purchase one of the biggest financial investments of a person's life. Well, what are these closing costs and why do I have to pay them? Well, they are basically a collection of individual fees charged by the lender creating the loan and the title company who will carry out the closing instructions of the official sale with the county that you buy your home in. Basically, understand they are a list of itemized fees charged by your lender and a handful of fees charged by the title company you close your sale with. Let's get into what the bank fees are. If you're using the typical bank financing we spoke about in the previous episode, then you can expect a certain amount of lender charges to go along with your new loan. Remember that payment we talked about, PITI? Principal and interest being the loan you're approved for, TI, taxes and insurance, being made part of your monthly payment to make sure that they are kept current. When you close the sale of your new home, a certain amount of property taxes and hazard insurance are charged up front as a closing cost. So let's say the county you're buying your home in charges $1,200 a year for property taxes of your house. Well, most lenders will want to impound at least 1 year's worth of taxes when you buy. A lot of times they want 18 months worth, but we'll use 1 year as an example to keep the numbers simple. Why do they impound these numbers in the first place? A year worth of taxes ahead of time? Basically, it's for the lender to protect themselves. See, if they loan you this money and you don't make the payments immediately, then they're going to have to foreclose on the home. And usually the foreclosure process will take them about a year to legally remove you from the property. So they'll want to make sure those property taxes are paid if they have to go through that. So if the property taxes are $1,200 a year, then right there is your first closing cost you can expect to pay. The next would be your hazard insurance. Let's say to insure your home against any loss to the lender for their $100,000 loan amount, the insurance company charges $800 a year. So go ahead and add that $800 on top of the $1,200. Now you're at $2,000. They're adding up quick. What's next? Well, you may qualify for the $100,000 loan, but before your lender pays out that money for you to purchase the home, they want to make sure it's worth the money. They don't want to loan you $100,000 on a home that's only worth $50,000. Actually, in reality, they won't loan a penny less than what the home is actually worth. Well, how do they find out what it's actually worth? Well, the lender requires an appraisal to be done. An appraisal can cost anywhere between $300 to $600 most of the time. Another charge to you. Now you're at, let's say, $2,500. Well, speaking with your mortgage broker or loan officer who is setting up the loan will give you a breakdown of every fee involved with a home purchase. I'm mainly giving you the typical fees with the typical loan. When you go through the pre-approval process, your mortgage broker will give you what's called a GFE, standing for Good Faith Estimate. This is a breakdown of all the fees that you can expect. Your mortgage broker does a lot of work to prepare the loan for you, which is why they have a closing cost charge that pays them as well. This can vary, but it's typically 1% of the purchase price, called the origination fee. Well, in this example, 1% is $1,000 to originate and process your new loan. So now you're up to $3,500 in closing costs, which is starting to land in the 3 to 5% range of the closing costs that I told you you can expect. Okay, so those are most of the typical bank finance loan closing costs. Oh, and also a seller finance loan or a hard money loan won't have any of these charges up front. The appraisal possibly, but not as a requirement. More of a personal choice for you, or possibly if you're negotiating the price with the seller or the hard money lender, but it's not a requirement. Really, the only closing fees you'll pay as a buyer on a seller finance or a hard money sale would be the title company fees. So let's get into what some of those fees are now. The title company plays an important role in the sales process. They ensure clear title as it transfers from buyer to seller. They research the history of the property as it has changed hands and make sure there are no other possible owners or lien holders against the property. Nobody wants to buy a home they've worked so hard to get just to find out some other random person owns it as well. That's why it's typically a seller's closing cost to pay for title insurance. Yes, the seller has their own stack of closing costs they pay when it comes to selling. Since this portion of the podcast is designated to the buying process, we'll stick with focusing on the buyer fees. When it comes to the title company, the buyer doesn't have many big fees. Splitting an escrow fee and the county recording fee with the seller is mostly it. The escrow fees are usually only a few $100s. And it's how the escrow and title company gets paid for their work. And like I said, they're usually split between buyer and seller. The recording fee is usually less than $100. That's the fee to record the official sale documents when everything is all done. So basically, when your sale is recorded with your local county, then it's complete. The property has officially changed hands. Congratulations, the home is yours. Let me give you one more tip about closing costs. On a conventional loan, you can ask for the seller to pay up to 3% of the purchase price towards your closing costs. On an FHA and VA loan, you can sometimes ask up to 6% of the purchase price. I say sometimes because the rules always change with lenders and with banks, so those numbers could change as well. But in our $100,000 example, that's anywhere from $3,000 to $6,000 that you wouldn't have to use any of your own cash for. Pretty cool, right? But just keep in mind, whatever you're asking the seller to pay for in your closing cost is just like asking them to lower the price that amount. So if you offer $100,000 but want 3% towards your closing cost, that's just like offering the seller $97,000 with you paying your own closing costs. So keep that in mind when you're negotiating your offers. Speaking of making offers, now that we got all our homework done, we're ready to go shopping and make an offer on that first home for you. In the next episode, we'll get your offer accepted and go over what you can expect from there. So to sum this episode up, we broke down your loan closing costs and your title company closing costs, plus gave you some basic figures of how much you can expect them to be. Also, a possible way to save you some cash and get the seller to pay those fees for you. Thanks for joining me in episode 5. I hope you got some good information out of it. If you have any questions or comments, I left my email in the link below. Feel free to let me know if there's anything you'd like me to cover in future episodes. Otherwise, let's get your offer accepted in the next episode. See you there.